Australian Philanthropic Services, acronym APS, was commenced about 6 years ago. I founded the organisation. It's a charity and a not-for-profit organisation that's independent from any other organisation, and I established it really to help philanthropists, people who wanted to give money to charity but didn't quite know how or the right structures and needed guidance, and that's really what it was about. And then I set about recruiting a fairly high-profile board. People like David Gonski's on the board, and Belinda Hutchinson and Gail Kelly, Tim Fairfax, myself and others, to make sure it had the right credibility, and away it went from there. We now have over 320 clients, which are families generally, who are interested in philanthropy, and we help administer their funds or guide their thinking about philanthropy. APS really does things for people that they're not aware of. So in the charitable sector, there's these things called ancillary funds, which are very much, if you think of superannuation, you've got private superannuation funds known as self-managed super funds, and then you have public offer funds. In the philanthropic area, it's quite similar. We have things called private ancillary funds and public ancillary funds, and those are funds that are set up and administered, and when you put your money into those funds you get a 100% tax deduction. So you've parted with the money, but you get the tax deduction, and then you invest the money, and over time you direct a portion of those funds to charity. So really the key to understanding what we do for most of our clients is we break the nexus between the timing of the tax deduction on one hand and the timing of the giving. The government allows you through a niche area of law to get the tax deduction all up front through the right structure, which again we administer, and then people set about the giving it away over time. So we're really there to uncover this. Most people, business people, non-business people, they've never heard of these structures, these ancillary funds. There's two types of ancillary funds. So there's these private ancillary funds and public ancillary funds. If we talk to somebody about setting up an ancillary fund, we inquire about how much they want to put in the funds. If it's, generally speaking, large ticket items, say $1 million or more, people look at having a private ancillary fund, and people with, in our case, 50,000 or more will more likely go into a public ancillary fund, into the public ancillary fund which we manage, which has sort of sub-funds in it. So it's really accessible by people with 50,000 or more. The investment, once you're in an ancillary fund, again these trusts, the earnings are tax-free. You get a refund of franking credits like you do in most other structures. And if you're in a private fund, you do the investing yourself. If you're in a public fund, like APS Foundation is a public ancillary fund, we do the investing for you. Yeah, well, key with ancillary funds is the law requires you to give a certain amount away each year. So you've got to give 4 to 5% of the value of your account or your fund away each year to charity. So if you are the investor in the ancillary fund, you're the one that practically decides what happens. So if you're in our public ancillary fund, we tell you the amount available to give away to charity, and then you send us a note or ring us up and say, could you please write a cheque to this charity or that charity or whatever. So you are directing the giving. Technically speaking, the trustee ultimately has responsibility for that, but the trustee takes advice from the client, and that's how it works. So it's a really good way for people to think about philanthropy a little more deeper, put money aside today, which they can then give away over many years.